Hello and welcome to the show. In the news, the Apapa Customs Command generates more than 203.3 billion naira. That's its revenue between the months of January to June 2019. Nigeria gains 3.12 million internet users in May this year. The French government plans to introduce an eco-tax that's for all flights from the country's airports. Today, our focus is on capital importation and FDI, that's foreign direct investment flow into the country. Let's break it down and see what this really means. Welcome, it's Business Nigeria. The Apapa Customs Command has generated more than 203.3 billion naira as revenue between the month of January to June 2019. The command also recorded more than 95,000 metric tons of exported goods valued at 46 billion naira. Ifunaya is the reports.
Giving insight into the command's activities in the past 6 months, the area controller, Mohammed Abakura, revealed that a comparative analysis of the revenue collection of the command between January to June 2018 and 2019 shows an increase of more than 26 billion naira, considering that the command collected 176.76 billion naira within the same period in 2018 as against 203.3 billion naira generated so far.
The Apapa Area Command has a monthly revenue target of 31 billion 46 million 655,039 naira and 39 kobo, and a yearly target of 372,559 million 860,472 naira 23 kobo.
At the terminal, Comptroller Abakura showcased seizures of several items confiscated for breach of federal government fiscal policy measures. Containers of rice and tramadol were among the smuggled goods.
A declaration was made for pharmaceutical items, and if you look at the declaration, they mention a particular medicament. They did not mention the tramadol. But upon examination, we got intelligence before, so we've been trailing. Then, after declaration is made, we went down and examined the container and discovered tramadol cartons were concealed with the other medicaments.
He warned that traders' continued non-compliance to import guidelines would result in forfeiture of smuggled goods.
The law is explicitly clear about false declaration. It's outright seizure. And that's what we've done.
It was noted that trade would be facilitated when transactions follow legitimate guidelines. Ifunanya Eze, TVC News, Lagos.
It's good to see these figures coming out from Nigerian Customs Service as part of revenue generation to help government, achieve budget actualization and all of that. Let's move on now. Nigeria has gained 3.12 million internet users as at May 2019. The latest monthly internet subscribers data by the Nigerian Communications Commission shows that the figure is lower than the number of new internet users recorded by mobile network operators the previous month. According to the data, Airtel, MTN and Globalcom gained more internet subscribers during the month under review, while Now Mobile was the big loser. The number of active subscribers to mobile network services in the country rose marginally by 21,491. The National Bureau of Statistics recently released data on total capital importation to the country in the first 3 months of the year. The report shows that the total capital flows to the economy stood at $8.48 billion in the first quarter of 2019. The figure also indicated that the first quarter figure was more than the last quarter of last year by 216%. Prior to the release of the NBS data on capital importation, The Central Bank of Nigeria said the total capital flows to Nigeria from January to May stood at $14.2 billion. Foreign direct investment accounted for $2.87 billion, representing 20.18% of the total amount. The economic data released so far by the agencies of government has since shown that the impact of the tension that preceded the elections did not reflect on the economy. Analyzing the capital importation figure as released by the NBS showed that the bulk of the flows into the country came from a portfolio investment, or what could be regarded as hot money in the financial parlance. The offshore portfolio investors imported capital stood at around 56.5% of the total capital flow, which is $7.1 billion. Many analysts say to attract the needed FDI, the country must be prepared to implement investor-friendly policies, such as improving the ease of doing business, ensuring stable macroeconomic environment, and tackling insecurity across the country. A senior economist with SPM Professionals, Paul Alaje, now joins me from our Abuja studios to look critically at this subject. Hello, Paul. It's good to have you join us on the show.
Thank you for having me, and good afternoon.
Yeah, Paul, I'm sure you've seen this figure, $8.48 billion, an increase of 216%. How does this come to you? Let's start that way.
Good news, particularly the component of capital importation. When we talk about portfolio investment, we have all-time high of over $7 billion US, which we've never had that in recent time. So it's good news, which means our money market is doing well, particularly in terms of investment coming from outside the country. And in the coming period, we'll see what CBN will report regarding the currency, to see how Naira has performed regarding the Naira and other foreign currency, because of the figure that was just released by National Bureau of Statistics.
Paul, let me follow you up on that. Does it mean that investment confidence is gradually always back to the Nigerian environment? Would you say that is what is happening at the moment?
Absolutely, that's it. Because when you compare what we had in first quarter this year to first quarter last year, it's over 200%, just as you mentioned. And when you compare that with last quarter of last year, it's quite high also. It's about 30–40%, which means there has been consistent increase in growth. Which is an evidence of business confidence and investment confidence in the country, particularly in our money market, because it is majorly driven by portfolio investment. Our hope is that this will grow beyond money market to, portfolio investment to having foreign direct investment, which is, of course, more secured, which is of longer term in terms of investment in our country.
Paul, let's look at what the central bank has raised, some concerns raised by the central bank, talking about how financial institutions lend, their lending habits. They have condemned it. They're not doing so well in lending to the real sector. What most of them do is to invest in treasury bills and government bonds. Now, central bank is looking at checking all of this. What do you think about that move? Is it a way to go?
It's a good move. But we have to consider that move with a lot of caution. When you look at Nigeria lending environment, it is really very risky for commercial banks to lend to most small businesses or medium-scale businesses that you can hardly trace or track in terms of their capacity to pay back. So, but CBN is coming with something, you say, in about 3, 4, 5 MPC meetings ago, it's been mentioned that they could use their CRR as what they will give back to their customer in form of loans, so that it can expand the loan facility. But maybe because of this new sanction that CBN has strengthened, to say that 50% of any commercial bank, any DMO, that refuse to lend up to 60% in deposits to real sector, in this case, 50% of the money of deposit must now become their cash reserve requirement, Maybe because of that, we will see some expansion in lending in the coming period, which of course we have implication of growth, which of course we have implication on job creation, etc., etc. I, to a large extent, think that is good. But my worry, again, is about the sanctions CBN wants to place, because there was a time CBN mentioned up to 80%, but most banks could not push for that. And if they push too hard, we'd also need to be worried of non-performing loan, which just started coming down. It is not just about the bank. They have a side, they have a blame on one hand. We also need to look at macroeconomic variables to create that environment for businesses to thrive. When businesses thrive, naturally they make more income. With more income, they can service facilities or their loans, which will make more resources and more money available to the DMBs, I beg your pardon.
Now, Paul, let's look at the stability experienced at the moment in the foreign exchange market. That's been a little bit of stability that everybody has commended. Some are saying thanks to the I&E window, that's the import and export window opened by the Central Bank of Nigeria. Now, looking at the way at which the Central Bank has been defending the currency, trying to protect the Naira, how long do you see us sustaining this very kind of move? Is this what we'll continue to do? Or when are we going to address that disparity that still occurs between the interbank and the parallel market?
Three things. The first one is that there has been no administration in central bank that have been able to sustain or defend Naira beyond 8 years. By 7th year, it just will not be manageable. We just cannot manage it beyond 7 years. So if you want a timeline for it, we have benefit of hindsight that tells us that there is no central bank in the history of the bank, of the Apex Bank. The maximum anybody have been able to do is to create that cushion or to create that defense for the Naira, but it will never more than 7 years. Because even the currency you are defending against will also be affected by inflation. So that's on the side. Two, I think central bank also needs to decide if they want to merge the gap between official window, import-export window, and what we have our parallel market. Because the gap of about 50 Naira is just too much for us to think that all is well. Now, why do CBN need to defend? That is the key issue. Do we think that CBN just want to keep defending Naira? I think that should not be, that is not the thing. When you look at Nigerian spending pattern, we have marginal propensity to consume, that is, of every 1 Naira you receive, the proportion of that money that you spend on consumption, particularly made in Nigeria. The second part is marginal propensity to save. The proportion of that money that you save for future reasons. Then number 3 is proportion of the money you spend to pay taxes, called marginal rates of taxation. And lastly, marginal propensity to import. To a large extent, most of the money we receive today are spent on importation. Unfortunately, and without the will of Nigerian people, because we don't have better options, we have to import camera, we have to import chairs, we have to import many things. In fact, import some agri-produce that we can even produce locally. Some of these things are the reasons why Naira is being attacked by the foreign reserve, and CBN must just defend it for us to have something better.
Paul, let's look at the issue of foreign direct investment and portfolio investments now. The portfolio side seems to be very much on the high side. And many are saying that these guys can always pick their briefcases and move back to where they come from when there are little challenges or maybe there's a shock anywhere. How safe is it to keep on?
Please, can you repeat that?
Okay, I'm talking about foreign portfolio investors. Many are saying that we need foreign direct investment other than portfolio investors. What do you make of that?
Absolutely. 84% of this increase of over 8 billion Naira comes from foreign portfolio investment, and we have only less than 2% come from foreign direct investment. What is more sustainable for a country is foreign direct investment. The one that you can plan with, the structures and real businesses that are in your country, is not portfolio investment because it is susceptible to changes in FX. If Nigeria had issue with foreign exchange or distortion, you will see that foreign direct investment, foreign portfolio investment, like we experienced over $7 million depletion, that is negative growth in 2014, which was the lowest in the history of the country, might also happen. How do we learn from that? We need to create economic fundamentals that makes investment more attractive beyond investing in our money market, beyond investing in bonds, government bonds, treasury bills, and all other financial instruments, but investing in real businesses in the economy. And those fundamentals must be put in place in order for us to attract those kind of investment. And what are these fundamentals? We need to get power correctly. We need to get infrastructure correctly. And all of this will cost us more money. Maybe government wants to, authorities, both fiscal and monetary authority, maybe we should include trade authority to see how these three could work together to ensure those coming to invest in Nigeria are investing directly in the real sector. This is what can stay with us. This is how United Arab Emirates, this was how they changed their policy beyond foreign portfolio investment to foreign direct investment. Today they have Burj Khalifa. They have quite a number of buildings, which is real estate driven, in their country and the environment that kept attracting more people, more funding to the country. And I believe that if Nigeria would do the same, we're going to not just see improvement in our capital importation, but we see significant improvement even in our foreign direct investment.
Paul, let's round up this discussion this way now. Let's look at these policies that we've been talking about that can actually make us get more foreign investments to come into the country. You've identified some of them: infrastructure, power. But let's look at some of the basic things that also make government, talking about policies now, that we really need to, tweak to make us get it right. Did you get that, Paul?
No, I did not get that.
On a final note, just let's look at policies of government that really needs to be tweaked to make us achieve what we really need to achieve, attract more investors to come into the country.
Oh, thank you so very much. I've always recommended what countries have attracted more investment to their economy, particularly developing economies. What did China do? What did India do? What did Indonesia? What have those countries done that made them attract more? For me, I will summarize them into 5 areas, which I believe Nigerian government, now that cabinet is being set up, will consider these 5 things and see how we can attract more investment in the next 4 years of administration of President Buhari, and also to make the vision of the president come to pass of lifting 100 million people out of poverty in 10 years and 10 million in a year. What are these things? 5 fundamentals. 1, we need structural changes. See how we improve our economy beyond agrarian and oil and gas to manufacturing sector. We need to get more power supply. I'm not saying we'll solve power issue within a year, but I am saying that we can do more by supplying more power supply to some certain industrial hubs, business hubs. Mr. Vice President had mentioned that more power hub will be created, which will support small businesses. And now that Nigeria have signed to African Continental Free Trade Agreement, this is the time we need to do this to protect small businesses, because larger businesses may just be fighting them from abroad. Apart from that, human capital development, which is evident in education and health, for us to build an educated labor force that is also healthy. And we also want to look at the structure and system for better institution. I believe if government at all levels, federal, state, and local government, would consider this, we will attract not just investment in terms of foreign portfolio investment, but more importantly, to foreign direct investment. We can stay with our people, which will guarantee more jobs for our economy and jobs that are sustainable. And in the coming period, Nigeria, of course, will be indeed giant of Africa, not just in football, but also in business.
Senior economist with SPM Professionals, Paul Alaje, it's always nice talking to you. Thank you for sharing your thoughts with us on the show today. Well, we'll take a break, and when we return, we have more for you. Don't go away. Glad to have you back. The Nigerian Union of Petroleum and Natural Gas Workers on Tuesday disrupted business activities at the headquarters of Slumberger over anti-labor policies and victimization of labor members of the company. We have details in this report.
This is the main entrance to the Victoria Island office of Slumberger Nigeria Limited. On a normal working day, business activities will be at top gear at this time. But today, members of the Nigerian Union of Petroleum and Natural Gas Workers have decided to take charge of the entire environment. They chanted solidarity songs, carrying placards with various inscriptions, bearing their minds on what prompted the action against the international company.
Never, never in the struggle for our youth. The essence of this protest is the management of Slumberger and Lambic refusal to recognize the rights of our member to join union. We have unionized our member for the past 1 year, yet management of Lambic, from instruction of Slumberger, refused to recognize them. And we wrote a letter to them. They refused to honor the letter. We sent the letter again to Ministry of Labour. Ministry of Labour sent invitation letter to Nupeng and to the management of Slumberger and Lambic. About on 3 locations, yeah, they refused to come to honor the invitation. So we have tried all our best to dialogue with them. And they, when the dialogue is failed or when they did not make themselves available, this is the last one.
For the affected workers, the working condition at the international firm remains disturbing, as they are always under threat by the management on a daily basis.
I'm a driver for Lambic working with Slumberger. I have been working for the past 12 years. We are facing poor salary. So the condition of the service is very poor. We are not paid well. That is our agitation.
We work here with fear. The pressure on us is too much and we are paid peanuts. At the end of the day, when we work, we get nothing. Before the ending of the month, we have started crying already. Can you imagine that when we take salary today, in 2 days' time, we cannot be able to pay our transport home?
Any day we come to work, you go home without sack letter, it is a bonus.
Well, my colleague now, market editor Effiong Ekop, is joining me live from Custom Street, Nigerian Stock Exchange trading floor in Marina, Uptown, Lagos. Hello, Ekop. Take it away.
Hello, Tolu. Good afternoon.
Good afternoon.
Well, the market couldn't hold to gains that were met yesterday, and we were surprised that only very big securities were down, from mid-trade till closing hour. Look at Airtel that was able to lift the market by 10% yesterday. The company came down by almost the same margin and dragging down many other stocks, and then the market had to close in the negative territory. Others like Fort Oil, Corn Oil, Linkage Assurance, NACO, they were all down. So the market was painted red, and the investors still remain on the sidelines. So the all-share index performed very low, 0.21%, and stockbrokers, many of them, were not so happy at the trading floor. So the main problem in the market is this confidence and the information that the federal government, what policy is guiding this economy. That's just what we are expecting. And so long as it takes so long, for the government to show this kind of a green card, then the market remain in, this standstill position.
All right, let's see how that plays out. The information today is saying that the ministerial list will soon get to the Senate. So we expect that very soon that will be resolved and the confidence will return to Nigerian capital market. My colleague, Effiong, thank you very much for joining us on the show. Geopolitical tensions and OPEC cuts appears to have stabilized oil prices, countering fears of a global economic recession. At the London market, the European Brent moves up to $65 per barrel. For the OPEC basket brand, dealers offer $63 for a barrel. That's our show. Thank you for watching. Let's do this again, same time tomorrow. Enjoy the rest of your day.